Assalamualaikum. My name is Muhammad Zulkifli bin Jamaluddin.
Assalamualaikum warahmatullahi wabarakatuh. My name is ADILAH ZULKIFLI.
Hi, my name is IRENE.
Hi, Assalamualaikum. My name is BALQIS binti NORIZAL.
My name is Nurul Najihah binti SAAT.
I would like to present in the part of company background of Selangor Dredging Berhad. Firstly, Selangor Dredging Berhad was operated as a real estate owner and developer. The company offers property development services as well as provide properties for vacation stay, short-term rental and sub-sale. Besides that, for over 2 decades, the company's sole business was tin mining. It was the first Malaysian company to construct and operate a dredge. It operated 2 dredges in Dengkir, Selangor, which is in the year of 1966. There operates the first dredge, and the second dredge was constructed in the year of 1971. As well as the second dredge was become the largest and most advanced dredge in the world. In the early of the year of 1980, Selangor Dredging began to put in motion for a plan of diversification. This led to the company's involvement various activities including hardware manufacturing and retail manufacturing of tires rim. And in addition, Selangor Dredging Berhad began in 1962, incorporated Selangor Dredging Limited, and in the year of 1964, the company changed its name to Selangor Dredging Berhad upon listing on the main board of the Kuala Lumpur Stock Exchange. After a period of consolidation which completed in the year of 2004, Selangor Dredging Berhad is now a company focused fully on property activities such as hotel, property management and leasing, as well as its main business activity of property development. And last but not least, Selangor Dredging Berhad is now known as an award-winning developer who produce niche property developments with innovative concept and design. And the headquarters of Selangor Dredging Berhad was located at Wisma Golden Eagle Realty, which located at Jalan Ampang, Kampung Baru, Wilayah Persekutuan Kuala Lumpur. For the next slide, I will explain about the board of directors for company Selangor Dredging Berhad. Basically, Selangor Dredging Berhad is governed and managed by a board of directors that consists of senior and distinguished leaders from the industry. The board of directors set high standard for the company employees, officers and directors. Firstly is Mr. Eddie Cheng Ing Huang, which is the chairman of the board, investment and remuneration committees, and he is also a member of the audit and nomination committees. Mr. Chiang has extensive senior management experience, having been involved in a number of successful entrepreneurial business in Malaysia and overseas, primarily in ASEAN, especially in the country of Hong Kong and Australia. And second is Mrs. Teh Lip Kim, which is the managing director and a substantial shareholder of the company. She was appointed to the board as executive director on 1st August 1996 and was promoted to the position of managing director on 1st July of 1998. And in addition, Datuk Chan Chon Sian, as an independent non-executive director of the company, was newly appointed on the 13th July of the year of 2020. Besides that, Mrs. Teh Lip Ping, as a non-independent and non-executive director and a substantial shareholder, was appointed as a director of the company on 28 July in the year of 1994. And last but not least, Mrs. Selma Enwelil binti Mustafa Khalil, as an independent non-executive director, was appointed as a director on 31st December in the year of 2018. She is also a member of the audit, investment, nomination and remuneration committees. And lastly is the award and recognition of the Selangor Dredging Berhad. First is gold winner in FIABCI Prix The Excellence Awards. Second is Best Residential Development in the Asia Pacific Property Awards in the year of 2019 until 2020. And last but not least is 2 bronze winner in the Prop Malaysia Best Managed Property Awards in multi-owned strata and non-strata.
I'll be presenting on the financial ratio of SDB. Basically, financial ratio is a useful tool that help business managers and investors analyze and compare the financial relationship between the accounts on the firm's financial statements. Financial ratio is created with the use of numerical values taken from the financial statement to gain meaningful information about a company. Financial ratio also use the data gathered from the calculation of the ratio to make a decision about improving the firm's profitability, solvencies, and liquidity. Financial ratio can be classified into liquidity ratio, leverage ratio, activity efficiency ratios, profitability ratios, and market ratios. On to the first ratio, which is liquidity ratio. It is a type of financial ratio that is used to determine a company's ability to pay its short-term debt obligations. The metric helps to determine if a company can use its current or liquid or asset to cover its current liabilities. 3 liquidity ratios that are commonly used are the current ratio, quick ratio, and cash ratio. Let us move with the first one, which is current ratio. Current ratio is a measure of how far the claims of short-term creditors are covered by the current asset. So the formula for the current ratio is current asset divided with current liabilities. So what we have gathered here is that in 2019, the current ratio that we have gained is 1.34 times, whereas in 2020 we got 1.12 times. So basically, SDB has RM1.34 in 2019 and RM1.12 in 2020 in current asset for every RM1 in current liabilities. Even though there is a decrease from 2019 to 2020 by 0.22 times, this shows that SDB are still able to finance their short-term obligation, which is current liabilities, as it is still higher than the value of RM1. But still, they need to improve, as SDB has only extra 12 cents only after paying for the current liabilities. Okay, so now is quick ratio. Quick ratio is to measure the firm's ability to pay off its short-term obligation without having to rely on the sale of inventory and prepaid. For the formula of quick ratio is current asset minus inventory minus prepayment, and it will be divided with the current liabilities. So basically in 2019, we have gained 0.52 times, and in 2020, we have gained 0.41 times. In 2019, SDB actually has 41 cent, and in 2020, SDB has 52 cent in quick asset without having to rely on the sale of inventory and prepaid for every RM1 in current liabilities. There is a decrease by 11 cent, and the SDB still cannot pay off its short-term obligation as it is less than the current liabilities of RM1. The liquidity position of SDB in this area is actually not very good. On to the third one is cash ratio. It is to measure the ability of the firm to cover all the current liabilities immediately without having to sell or liquidate the asset. So the formula for the cash ratio is cash divided with current liabilities. In 2019, we have gained 0.03 times, and in 2020, we have gained 0.09 times. SDB actually has 0.03 cents in 2019 and 0.09 cents in 2020 in their cash ratio for every RM1 in current liabilities. This shows that even though there is an increase by 0.06 cent, still SDB does not have enough cash to cover their current liabilities within the short period, as the amount is lesser than RM1 of the current liabilities. In order to be able to have enough cash, they need to have more than RM1 of their cash. On to the second financial ratio, which is leverage ratio. Leverage ratio is any kind of financial ratio that indicates the level of debt incurred by a business entity against several other accounts in its balance sheet, income statement or cash flow statement. This ratio provides an indication of how the company's asset and the business operation are financed, which can be by using the debt or equity. The first one is debt ratio. It is to measure the percentage of the total funds provided by creditor as compared to funds provided from the owner's capital. The formula for the debt ratio is total debt divided with total asset. In 2019, for the STB, we have gained 29%, and in 2020, we have gained 30%. There is a slightly increase in debt ratio from 29% in 2019 to 30% in 2020. This means that STB liability is increasing compared to the asset of the company. However, even though there is an increase, STB is still at a reasonable risk level, as it is still lower than 50% and it is not that risky to the lender. On to the second one, which is debt to equity ratio. It is the relative proportion of equity and debt used to finance a firm's asset. The formula of the debt to equity ratio is total debt divided with total equity. In 2019, we have gained 49% from the STB annual report, and in 2020, we have gained 51%. There is a slight increase in terms of debt to equity ratio from 2019, which is 49% to 51% in 2020. This means that the company is at risk and does not have better in terms of investment funded as much as creditor has. One is time interest earn ratio. It is to measure the firm's ability to meet the interest payment. The formula of the time interest earn ratio is earning before interest and tax divided with interest expense. In 2019, we have gained 1.92 times, and in 2020, we have gained 0.34 times. Basically, there is a huge decrease in time interest earn ratio from 1.92 times in 2019 to 0.34 times in 2020. This means that STB is less favorable in 2020, in which it is much more likely to be exposed investors and creditors to the risk in terms of solvency compared to 2019. Part of the financial ratio is activity or efficiency ratio. Efficiency ratio is a metric that is used in analyzing a company's ability to effectively employ its resources, such as capitals and assets, to provide more income. The ratio serves as a comparison of the expenses made to revenues generated, essentially reflecting what kind of return in revenue or profit a company can make from the amount it spent to operate its business. First activity or efficiency ratio is inventory turnover. It is to measure how effectively the firm using the inventory to generate sales. The formula of the inventory turnover is cost of goods sold divided with inventory. In 2019, we have gained 0.45 times, and in 2020, we have gained 0.52 times. There is an increase in inventory turnover from 2019, which is 0.54 times, to 2020, which is 0.52 times. This shows that STB has effectively used their inventory in generating sales. The higher the inventory turnover, the better it is, as STB can generate more sales in 2020. Second one is average collection period. It is an average length of time that the firm must wait after making credit sales before receiving the cash. The formula of the average collection period is account receivable divided by sales and times to 365 days. In 2019, we have gained 86.04 days, and in 2020, we have gained 64.94 days. There is a decrease by 21.1 days from 86.04 days in 2019 and 64.94 days in 2020. This shows that STB collect its debt faster in 2020 compared to 2019. In general, we can say that the shorter the length of time to collect the cash, the better the company it is. One is total asset turnover. It is to measure the firm's effectiveness in using all of its asset. The formula of the total asset turnover is sales divided with total asset. In 2019, we have gained 0.18 times, and in 2020, we have gained 0.17 times. There is a decrease by 0.01 times. This shows that the company slightly has lower effectiveness in using all of its asset in generating sales. However, it doesn't give much impact to the STB. One is receivable turnover. It is to measure how efficient does the company collect its receivable. The formula of the receivable turnover is sales divided with account receivable. In 2019, we have gained 4.24 times, and in 2020, we have gained 5.62 times. There is a slightly increase by 1.38 times from 4.24 times in 2019 to 5.62 times in 2020. This shows that the company is quite efficient in collect its receivable compared to 2019. Is fixed asset turnover. It is to measure the firm's utilization of its plants and equipment. The formula of the fixed asset turnover is sales divided with fixed asset. In 2019, we have gained 1.11 times, and in 2020, we have gained 0.94 times. There is a slightly decrease in fixed asset turnover from 1.11 times in 2019 to 0.94 times in 2020. This shows that the STB did not utilize well of its plant and equipment in generating sales.
Profitability ratio is a type of financial ratio used to measure the company's ability in using its asset and control its expenses to generate an acceptable rate of return. Profitability ratios can be compared with efficiency ratio, which consider how well the company uses its assets internally to generate income. There are 5 elements in the profitability ratio, which are the gross profit margin, operating profit margin, net profit margin, return on asset, and return on equity. Profit margin. It measures the company's ability to control cost of goods sold relative to its sales revenue, the relative contribution margin from sales. The formula for the gross profit margin is gross profit divided by sales and time with 100. In 2019, the gross profit margin is 33.23%, and in 2020, the gross profit margin is 35.90%. Selangor Dredging Berhad gross profit margin in 2020 is higher than 2019. Secondly, operating profit margin. It measures the productivity of assets in providing return to both creditors and stockholders. The operating profit margin formula is operating profit divided by sales and time with 100. In 2019, operating profit margin is 13.94%, and in 2020, the operating profit margin is 2.69%. As we can see, in 2019, Selangor Dredging Berhad has high operating profit margin, which is 13.94%, compared in 2020, which is 2.69%. Thirdly, net profit margin. It measures the after-tax profit per ringgit of sales after deducting all expenses, including interest and tax. The formula for net profit margin is net income divided by sales and time with 100. In 2019, the net profit margin is 9.53%, and in 2020, the net profit margin is negative 1.84%. As we can see, in 2020, Selangor Dredging Berhad's net profit margin is negative 1.84%, which is lower compared to 9.53% in 2019. Next, return on assets. It measures the company's overall return on all of its asset investment. The formula for return on asset is net income divided by total assets and time with 100. In 2019, the return on asset is 1.69%, and in 2020 the return on asset is negative 0.32%. As we can see, the company's return on asset during 2019 is 1.69%, which is higher compared to negative 0.32 during 2020. Lastly, the profitability ratio is return on equity. It measures of rate of return on the investment of the common stockholder or net worth. The formula for return on equity is net income divided by shareholders' equity and times with 100. In 2019, the return on equity is 4.36%, and in 2020, the return on equity is negative 0.54%. As we can see, Selangor Dredging Berhad has decreasing from 2019, which is 4.36% to negative 0.54% in 2020.
Okay, so I will proceed with the identifying, analyzing, and justifying the company financial performance. So firstly, for the current ratio, SDB has higher ratio in 2019 compared to 2020, as this show that they are not able to pay its short-term obligation quite sufficiently and efficiently, as this concept stated that the higher the ratio, the better. So for the quick ratio, SDB has higher ratio in 2019 compared in 2020, as this indicate that SDB cannot pay its short-term obligation if not rely on the sale of inventory or prepaid, and the difficulties may arise when they trying to meet it, as the decline cannot be attributable to an increase in short-term debt or a decrease in current asset. As for the cash ratio, SDB has RM 0.03 in 2019 and RM 0.09 in 2020 in their cash ratio for every RM1 in current liabilities. A ratio above 1 means that with cash and cash reserve, a firm will be able to pay off its existing obligation and have money left over. However, this shows that SDB don't have enough cash to cover all the current liabilities immediately. So next, for the activity and efficiency ratio, for the inventory turnover, it stated that there is an increase of 0.07 in the inventory turnover from 2019 to 2020. This shows that the company during 2020 sells its inventory better compared to 2019. As next, for the average collection period, stated that there is decrease of 21 days from 2019 to 2020. This means that on 2020, the company collects its payment faster compared to the previous year, which is in 86 days, and shows that the company more efficient in debtors management and the debtors are more liquid. As for the total asset turnover, there is decrease of 0.01 of the total asset turnover from 2019 to 2020. This means that in 2020, the company has a lower effectiveness in utilizing all of its assets and not efficient at generating revenue from its assets. Then, for the receivable turnover, it stated that there is an increase of 1.38 ratio of the receivable turnover from 2019 to 2020. This means that the company's performance to get their customers to pay up their debts is higher in 2020 compared to 2019. And lastly, for the fixed asset turnover, a higher ratio is more desirable and favorable because it indicates that efficiency in generating sales using fixed asset. For SDB, the fixed asset turnover ratio in 2019 is 1.11 times, while in 2020 it decreased to 0.94 times. This could be due to inefficient usage of assets. Then proceed with the leverage ratio. Firstly, the debt ratio, a higher ratio shows that the company has more liabilities. There is an increase of the debt ratio of 1% from 2019 to 2020. This shows that the company does not have much assets that are financed by its debt. Then, for the debt to equity ratio, there is slight increase of 2% of the debt to equity ratio from 2019 to 2020. This means that the company is high risk company and have a bet in its investment. And for the time interest earn ratio, there is decrease in difference of 1.58 of the time interest and ratio from 2019 to 2020. It means that 2020 the company is less favorable because it presents more risk to investor and creditors in terms of solvency compared to 2019. Then moving on the profitability ratio. As firstly, for the gross profit margin, SDB gross profit margin in 2020 is higher than in 2019, as this shows that in the year's time, the company has higher efficiency of cooperation, meaning that it can still cover the operating expenses, fixed costs, dividends, and depreciation, also providing net earnings to the business. As for the operating profit margin, in 2019, SDB has higher operating profit margin, which is 13.94% compared in 2020, which is 2.69%. This means that the company are more well equipped to pay for fixed costs and interest on obligation, which have better chances to survive an economic slowdown, and are more capable of offering lower price in 2019 than in 2020. As for the net profit margin, in 2020, SDB net profit is negative 1.84%, which is lower compared to the 9.53% in 2019. Lower ratio in 2020 indicates that the company is not effective in managing its costs, pricing policies, and other non-operating expenses. Then, moving on the next, which is return on asset. The company return on asset during 2019 is 1.69%, which is higher compared to the 2020. The lower the profit per ringgit Malaysia of asset, the more asset intensive a company is considered to be. Therefore, it shows that SDB has become more asset intensive in 2020. And lastly, for the return on equity, it signifies how good the company is generating returns on the investment it received from its shareholder. SDB has decreasing from 4.36% in 2019 compared in 2020. It indicates how poor a company's management in deploying the shareholders' capital. This is because the company with high return on equity are usually more capable of generating cash internally and therefore less depend on debt finance.
I will be discussed on the improvement for the future financial performance. Okay, the first improvement is lowering the expenses by take a look of every area of the operations by finding a cheaper alternative for suppliers, equipment, and services. The management also should convert the available inventories into finished goods, increase its sales without having spending. Otherwise, the firms also can put an extra cost on the marketing and research development expenses, and therefore it can increase more cash sales and aggressive collections effort. The second improvement is recovering the outstanding debt. The unpaid invoice can harm the flow and overall health of the business finance, where the unpaid debt can lead to the hardship to covering operating expenses, where it is important for the firm to have efficient debtors management. Last but not least is utilizing the asset of the firm. Having an efficiency at generating revenues from the firm's asset can help the firms to store their wealth, to create income, and to reducing future expenses. Other than that, assets that are no longer used, that only taking space where it is better for the firm, sell them, which it can give the firms immediate cash, where better asset management will lead to the increase of the firm sales. As a conclusion, as you can see, the firm's profitability ratios are below the industry average, where the firms does not able reduce its solvency risk. The firm's liquidity and activities or efficiency ratios also still below the industry average, where it is important for the management to take several corrective actions to provide solutions for the firms.